4 reasons why precious metals are not a good investment. Coming up. Hi everyone, this is Ernesto from AttaBoyCowBoy, and on this channel we give you health and wealth tips to help you be more successful. Now we're in an economic decline right now worldwide because of COVID, and a lot of people are not sure where to put their money. And in times of uncertainty, you'll start seeing all over social media, the radio, TV, etc. about investing in precious metals, gold, silver, platinum, rare earth metals, even diamonds, which are not a metal, but they're still precious stones. And a lot of people are not sure. They're like, well, should I buy this stuff or not? You know, and we've been through this. This happens every time there's an economic decline. Remember, on average, over the last 100 years or so in the United States, we go through a recession on average about every 7 years. So every about 7 years on average, you're gonna start seeing all these ads popping up for precious metals. Now let me talk about them a little bit. Gold actually is really rare, and if you add up all the gold that was mined since 2000 BC when the Egyptians first started mining it to now, we only have about 3 swimming pools, 3.2 Olympic-sized swimming pools full of gold. That's it, worldwide. That's not a lot of gold, so it's pretty rare. And then silver is a lot more abundant. That's why the price is much lower. Then there's diamonds. Diamonds are a precious stone, but they are not in scarcity at all. It's actually a monopoly. It's owned by De Beers. It's a worldwide monopoly, and they only release small amounts of diamonds at a time to help artificially inflate the price. That's why if you ever go to like the hardware store, you can buy diamond tip blades to cut your tile or something like that. It's actually not that hard to get a hold of diamonds. Now, rare earth metals are another thing. They're actually not rare. They're very common. Now, rare earth metals are actually not very rare at all. They're very abundant in the Earth's crust. The thing is that they're very hard to extract. You create a lot of pollution. It's very labor intensive. That's why most of them are mined in China, where they have lax environmental rules and they stockpile them there. But rare earth metals are not very rare at all. But a lot of people like them because they use them for like smartphones, or electric cars use lithium and a lot of other metals that are hard to get a hold of. So they figure, hey, electric cars are becoming popular, so I'm gonna start stockpiling these. So let's go over the 4 reasons why you don't want to invest in them. Reason number 1, it's a very poor return on investment over time. And let me show you here on this graph I got. Let's switch to the graph now. All right, so if we look at this graph here, you'll see in about 100 years, from 1920 to 2020, silver has appreciated just over 2,500%, which is pretty good. Then gold has went up about 9,000%. But then you get to the Dow Jones, and it's appreciated in that amount of time over 36,000%. That's 4 times higher than gold. And the S&P 500 has appreciated over 47,000%. So that's about 500% more appreciation than gold. And if you were to add in the NASDAQ on there, the NASDAQ would be over 100,000% in the short amount of time that it's actually existed. And real estate, depending on where you are in the world, has actually appreciated in the hundreds of thousands of percentile points over gold. So when you compare it to other investments, it's actually a very poor investment. It has very poor performance over time. Reason number 2, it's a very unstable investment. The floor can fall out anytime. And I'll share with you an experience. I had a friend that talked me into buying a bunch of precious metals in 2008 when we had the big economic decline. And at the time, it made a lot of sense. I saw this, disaster going on worldwide with the stock market, with real estate, with everything else. I thought, God, I'm gonna buy some precious metals. Well, it started off good. The silver was around 15 bucks, and then it went up to almost 50. So I started like taking out lines of credit. I maxed out all my credit cards. I started liquidating some of my other assets. I got everything I could. I bought a bunch of precious metals. And long story short, after the economy started improving a little bit, the bottom just dropped out. I mean, very fast. That's the problem. It's very unstable. And as it's dropping, nobody wants to buy it. So you end up having to sell it for much lower than what the market price is. When you have stock, let's say you own some Apple or something, let's say the stock market's going down. Well, you could still sell it at the spot price, the price it's listed at. Not with precious metals, it's hard to move, so no one would buy it. I got stuck with it and it basically declined about 75%. And I got stuck with storing this stuff. So it's very unstable. I don't recommend it. Reason number 3, if you need some cash, again, it's very hard to liquidate. You're not gonna be able to sell your precious metals. It's pretty tough. You have to find someone on Craigslist or eBay or something like that. And people want a wheel and deal. And then you have to ship, 100-ounce bars of silver or, big chunks of gold. It's difficult to trade it. It's illiquid, it's heavy. You have to pay to store it. You can't store it under your couch or under your bed because someone could steal it. So you end up having to pay a lot of money, as I did, to store all those precious metals like in a vault somewhere. Otherwise you run the risk of losing it all. Reason number 4, opportunity cost. You miss out on other investments. Now in my case, I bought a lot of precious metals, several $100,000 worth, and it went down to almost nothing, 25% what I paid for it, and nobody wanted it. So I basically just put it away and figured someday when it goes back up, I'll sell it. Well, 12 years later, I paid around $50, it went down to 12, it's at $20 right now. It hasn't went up almost anything. So I've missed out on investing approximately $400,000. Now, if I would have put that money into real estate, which is what I had thought I was gonna do at that time, I would have made over 15 million from the calculations I looked at. So I'm at about, $120,000 out of 400, and I could have had about 15 million. So I missed out on all of that stuff. And let me give you another example. I looked at my dad's house that he bought in 1974, and then I looked at the price of gold. Price of gold, my dad likes to buy gold. In 1974, the price of gold was approximately $174. So from 1974 to 2020 right now, it's went up about 11 times, which is not bad, right? But then I looked at my dad's house. He paid $32,000 for it in 1974, and now it's worth over $900,000. So his house went up over 28-fold. It went up 28 times, whereas the gold he bought went up 11 times. So you tell me which is a better investment. So again, don't get caught up in all the hype. If you don't know where to put your money, watch the other video I have on solar panels. Solar panels are really safe and secure investment, and avoid precious metals at all costs, or you're gonna get stuck like I did. Thank you again for listening, and if you have any questions, please comment below. Thank you. Bye-bye.